While the vegetable price shock may reverse quickly, possible El Nino weather conditions along with global food prices need to be watched closely against the backdrop of a skewed southwest monsoon so far.
On August 10th, the RBI's 6-member Monetary Policy Committee unanimously decided to keep the repo rate unchanged at 6.5%. Thus, the standing deposit facility rate remained at 6.25% and the marginal standing facility rate and bank rate at 6.75%. This was the third time in a row that the MPC decided to press the pause button on repo rate hikes, with RBI Governor Shaktikanta Das saying that the pause had been done with preparedness to act if situation so warrants. By a majority of 5 out of 6 members, the MPC also decided to remain focused on withdrawal of accommodation. While leaving the cash reserve ratio untouched, the RBI said that banks would have to maintain a 10% incremental cash reserve ratio or ICRR from August 12th. The move is part of the RBI's efforts to drain excess liquidity from the banking system, following the withdrawal of the 2000 rupee currency note. The imposition of ICRR is a temporary measure which will reportedly suck out additional liquidity of over 1 trillion rupees. The RBI retained the GDP growth projection for the current fiscal year at 6.5%. Meanwhile, real GDP growth for Q1 of 2024-25 was projected at 6.6%. The MPC increased its consumer price index based retail inflation forecast for FY24 to 5.4% from 5.1% earlier. While Governor Das said that the recent spike in vegetable prices would exert sizable upside pressures on the near-term headline inflation trajectory, he was hopeful that the jump was likely to correct with fresh market arrivals. Das also said that there had been a significant improvement in the progress of the monsoon and Kharif sowing in July. The MPC raised its projection for Q2 FY24 retail price inflation by a full 100 basis points to 6.2%, beyond its comfort zone of 6% due to the spike in vegetable prices led by tomatoes. In the previous policy meeting, it had pegged Q2 inflation at 5.2%. The MPC pegged the inflation rate to be higher for the third quarter as well, at 5.7% against its previous projection of 5.4%. The projection for the fourth quarter remained the same at 5.2%. Meanwhile, retail inflation for Q1 of 2024-25 was projected at 5.2%. The latest MPC decision comes after retail inflation reversed its 4-month downward trend in June on surging food prices. The CPI-based inflation rate rose to a 3-month high of 4.81% year-on-year in June, against 4.31% in the previous month. Meanwhile, food inflation rose sharply to a 3-month high of 4.49% in June, from 2.96% in May. Against this backdrop, how long will the RBI's wait and watch posture continue?
To my mind, the wait and watch policy will continue through the course of the year. The reason being that since the RBI is targeting inflation and inflation appears to be very whimsical, one will have to wait and see until the time it stabilizes before there can be comfort drawn that inflation is really under control and the RBI can decide to probably consider a change in the overall policy direction. While the RBI has admitted that inflation is going to be at a higher level, maybe crossing 6% for 2 months, July and August, they do think that correction in terms of food prices, especially on the vegetables front, because these are seasonal shocks which have come through, will help to restore inflation to less than 6%. So I don't think there is a case of one expecting the RBI to increase rates in this particular phase. But definitely the fact that inflation is going to be above 6% in the second quarter is some reason for us to believe that the hawkish tone is going to persist for the rest of the year.
We expect the pause to continue till the end of this fiscal year, and there are 2 reasons for that. One is that the rate hikes that RBI has done so far, they have a lagged impact on the economy, and that impact is still playing out, and the peak impact is yet to play out. So they have to watch for how it impacts the economy. Second, I think, is the inflation scenario is a little uncertain because of the food inflation issue, and we'll get more clarity on that after the monsoon season is over, after the El Nino effect, whether how strong it is. We are clear on that, whether it has impacted some of the other countries in Asia from which we import edible oil, etc. So there are many things that to look out for. I don't see a rate hike happening now. I think unless I think inflation becomes a big worry, which is not the scenario that RBI is penciling in, nor are we penciling in.
Also, what is the key takeaway from the latest MPC meeting?
It's been a fairly hawkish tone. I would say hawkish not because of anything done to the repo rate, but first you have increased the inflation forecast, which makes a big difference. And second, I think this incremental CRR is something which is, of course, very of temporary nature, but the signal it sends is that, look, I don't want to increase the repo rate right now. So therefore, what I'll do is that there is surplus liquidity, there is potential high inflation. I won't touch the repo rate because that becomes a permanent increase which takes place. I won't go in for an open market operation, but I'm going to curb the amount of liquidity which can be used by banks, which could be having potential inflation impact. So I think hawkish note is what I would take away from this particular policy.
And finally, what will be the key areas of concern for the RBI going forward?
Now, vegetable inflation is extremely volatile. I'm not too worried about it. Even the central bank can look through it because it is going to come down within 1.5 to 2 months. But it's the cereals where I think both global and domestic factors are at play, where inflation is in double digits for quite some time now. I think what happens there is more of a worry. The central government has started intervening in the system, started selling at lower prices. How all that plays out, I think, is also the central bank will be watching that too. So I think the worry is more on the food grain part of food.
To conclude, the RBI is likely to continue with its wait and watch policy through the course of the year, while also maintaining a hawkish tone during that period.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.